Welcome to Investing Alchemist, your go-to channel for demystifying the world of stock market investing. This is our 8th episode, and I'm excited to continue our learning journey together. If you've found the stock market to be a confusing maze of terms, worry not, today's video is tailored just for you. Let's kick things off with our first term, the stock market. This is the place where stocks and securities are traded. Moving on to market segments, it's crucial to understand that the stock market comprises various segments like the cash market, derivatives market, where futures and options are traded, and the debt or money market for bonds and debentures. Example sentence: while many focus on the cash market, I find the derivatives market more interesting, exploring futures and options for strategic trading. In the context of the stock market, the market players includes promoters, think Mukesh Ambani for Reliance, retail participants, that's us, foreign institutional investors, like the government of Singapore, and domestic institutional investors, DIIs. Now, let's talk sectors. In the stock market, stocks are grouped into sectors based on their business: IT, banking, pharma, and FMCG, to name a few. For example, the IT sector in the stock market has flourished, with companies like TCS and Infosys leading the way in technological innovation. The term stock symbols in the stock market refers to unique identifiers for companies. For instance, TCS is the stock symbol for Tata Consultancy Services, and Infi represents Infosys. Moving on to outstanding shares, these are all shares issued by a company, including those held by promoters. Now, face value is the nominal value of a share listed on its share certificate. Even though a stock like Reliance might be trading at a much higher market value, its face value remains fixed at Rs 10. Speaking of market value or share price, this is the current trading price on your broker's terminal. For example, the market value of Reliance, or its last traded price, LTP, or current market price, CMP, could be Rs 2500. Let's delve into the heart of valuation with market capitalization, or market cap. It's the total value of a company's issued shares, calculated by multiplying the current share price by the total outstanding shares. For instance, Reliance's market cap in the stock market exceeds Rs 15 lakh crores. Now, based on market cap, stocks are categorized into large cap, mid cap, and small cap. Large caps are the top 100 companies, mid caps are the next 150, and small caps encompass everything beyond that. The term blue chip stocks is crucial in the stock market. These are shares of the biggest large cap companies with a history of good financial performance. Reliance, being a large cap stock, is also considered a blue chip stock in the stock market. Let's demystify penny stocks in the context of the stock market. These are usually small cap companies with low share prices. However, caution is advised, as beginners often get drawn to them without understanding the risks. Moving on to the annual report, this comprehensive document provides insights into a company's activities and financials. You can download the annual report of companies and gain a deep understanding of their performance. Next, we have IPO, or initial public offering. It's the process through which companies go public and raise money from investors. Example sentence: Tata Technologies, a privately held company, is planning its IPO in this year. Now, let's differentiate between the primary market and secondary market in the stock market. The primary market involves share transactions between the issuing company and public investors during an IPO. On the other hand, the secondary market involves transactions between public shareholders, where shares are bought and sold among investors. One exciting term is dividend. It's a portion of a company's profit distributed back to shareholders. However, it is not obligatory for a company to pay dividend. Moving ahead, we have portfolio, which is essentially the basket of stocks owned by an individual. Example sentence: my portfolio includes a mix of large cap, mid cap, and small cap stocks. Now, let's talk about CAGR, or compound annual growth rate. It's a percentage used to measure the annual growth of your portfolio. For instance, Nifty has shown a CAGR growth of 14% over the years. As investors in the stock market, our goal should be to beat this index. And that concludes our comprehensive exploration of essential stock market terms in the context of the stock market Part 1. If you found this video valuable, please like and subscribe for more insights on finance and investing. Thank you for joining us on this journey to financial freedom.